How's it going? It's Rocky. So for the past 10 weeks, this is our 8th week where our net profit is above $1,000 in my side hustle that I like to call my 5 to 9 after the 9 to 5. And if you're curious how we did this week, stick around and I'll show you exactly how my trades went. So what we're seeing here is the hourly chart for the past 2 weeks, and what that means is each candlestick that you see represents 1 hour. And the only reason I'm showing the past 2 weeks was I wanted to show you this very choppy session that occurred last week Tuesday until about Wednesday. And if you are following the market, Wednesday was FOMC, and that's when Jerome Powell and the Feds essentially increase the interest rate. So they have a 2-day meeting. It's something that everyone watches because the interest rates move that they make to either combat inflation or any other economic reasons, it has a huge impact. So that's why they pretty much pay attention to that. And you can see leading up to it, let's see, 1, 2, 3, 4, 5 to 6 days prior to FOMC, things were pretty choppy, and that's the reason why I drew these 2 lines here. So this is a way kind of important when you draw it. So I just pretty much drew the peak on the top and the bottom, and basically I was expecting it to pretty much be choppy during that range because people were unsure what to do, right? And then it wasn't until on FOMC you can see that it popped above this line. And now we have a new bottom, or one would think it's a new bottom, and hopefully it keeps going up. So just one way of looking at the market. A lot of people have different opinions on how to do a technical analysis. Just wanted to point out another tool you could do that. Drawing lines help, but end of the day, patterns are patterns, right? If everyone knew the patterns and all the patterns were right, then everyone would be super rich. But that's not really the case because the market is always right, regardless of what you do. It's just using tools gives you a higher probability of being successful. So here's one of the trades that I wanted to talk to you about. This occurred on Tuesday during the power hour. Power hour means it's the last hour before the market closes. In the Pacific time, it's perfect because that's during my lunch hour, which is from 12 to 1 p.m. On this trade that I have here, I pretty much opened 3 contracts and it gave me a bit of a drawdown. And as you can see here on the time base, when I had entered at that point, it was pretty much close to crossing over, but I took a bit of a risk because we were still on the oversold side. It was really the time base, like I've mentioned in the past. I've been depending a lot on this the past few weeks as the initial indicator that I follow, and it had crossed over when I did enter and we were on the overbought side. Unfortunately, with how choppy the market was, I was pretty much underwater twice during this trade, as you can see here. Underwater here and underwater here as well. But with 3 contracts, I ended up having an average of 31,724. And the reason I held on was power hour, I was seeing signs that it wanted to turn around a bit to be positive. And again, you can't have hopes like that, right? You want to trade with pretty much the indicators you have. You don't want to be hoping for something. But with this trade, just the choppiness of it, call it as a lucky trade. I got out on the correct side of the trade. Again, not my preferred way of trading, but just wanted to show you an example of how trades work, because sometimes you go by the book and still doesn't help you, and you do crazy things like this and it does help you. So it's just, there's some things that you just can't teach, and it's just something that you pick up as you trade more. And thankfully with this one, again, we got in at 31,724 and we exited at roughly 31,785 on this trade. And let's just do the math to show you exactly how we did on this trade. So we'll bring the calculator here. So basically we covered at 31,785 and we entered at 31,724. So that was a total of 61 points, which is quite nice. And since we traded 3 contracts, where each contract means $5 per 1 point. We multiply that by 15. So on this one trade right here that occurred during my lunch break, got us a gross profit of $915 before commissions and fees. So here's another trade that occurred in the evening, which is when I like to trade because I can do other things and I can pretty much have the screen on the side, right? It says ultimate side hustle for me because I'm not just staring at the screen basically forcing a trade. I am working on other things, and if there's a sign there that it's a good time to trade, then I do that, and it's not gonna conflict with my 9 to 5. So this occurred at around 9:35 p.m. in the Pacific Coast, and when I had entered this, pretty much, on the time base, the MACD had already crossed over, and this stochastic RSI was a lot closer to the oversold side. And the reason I'm saying those comments and that the image is not showing it is because these indicators are lagging. So something to, most indicators are, right? There's no, most of them are pretty much lagging indicators, which means that the data will come, it'll be compiled, and then it'll show you what the indicator is. So if you're fairly new, that's, I think, an important key that you have to worry about when using indicators. And on the tick base side on the right here, you can see that I had entered right after a crossover in the MACD. So I went from green to red, and basically I was seeing the stochastic RSI heading to the oversold side. So it doesn't look pretty clean, but this to me was pretty much a nice textbook trade. I was able to place an OCO in the end and close it out. So I was pretty much shorting at 32,513. And then we covered at 32,483. So that's a total of 30 points. And since it's 2 contracts, where each contract for every point move in the YM is $5, so really that's 30 times 10. So this nice little trade in the evening here that took me more or less about 40 minutes got us $300, which is a nice little trade for the evening, really. Now our account statement, I am recording this on Saturday, July 30th. It's about 11:42 in the morning. I usually release it on Fridays, but had a bit of a delay for this release. And the statement that I'm showing here is from Sunday, July 24th to today, Saturday, July 30th. So looking at our description here, I wanted to point out that I did pay myself this week. I withdrew $1,000. So what that means is we will add that $1,000 back to our ending cash. And you can see here, just looking at the amounts, it was a pretty good week for most of it. I traded Monday and Tuesday, all positive, and then pretty much took a break before FOMC, so I didn't really trade on Wednesday and Thursday. So everything was positive until Friday. I made a bit of a mistake on Friday. I did short 3 contracts, and because of that, we had a mark-to-market loss of negative $1,705. But let's see how we actually ended up for the week. So for the week, our ending cash was $45,033. However, we did withdraw $1,000 to pay ourselves, so we'll add that to our ending cash. And then our starting cash was $44,877.47. So happy to say that our total for the week, again, for the past 10 weeks, we've had 8 green weeks. And on all those green weeks, we've had at least $1,000 net profit. And this week is another one of those. And I'm thankful to be coming out green at $1,155.53. Now, divided by a 40-hour work week in the U.S., that would have been a hourly rate of $28.89. And just, the percentage for the week here, with our total $1,155.53, divide that by our starting cash of $44,877.47, multiply that by 100. We had a ROI this week of 2.57%. So my goal every week is to try to hit 10%, and 2%, hey, profit is profit. And the reason that I set this 10% for myself is I've noticed over the years, if I've ever had an ROI that was more than 10% in a week, it means that I was either very lucky, very good, which is not always the case, or I was over trading and taking too much risk. So that's my way to pretty much check on myself, I guess. I do that percentage just so I know how I did as far as risk goes as I'm trading. So that's our content for the week. Hopefully you like and enjoyed what you saw. If you didn't, give me another chance, and hopefully on the next week content you'll like what you see. All right, have a good one.